Hey guys, welcome back to We Talk Money. I'm your host, Chris Dunn. We're here with Nikki, certified financial planner, and Travis, stock investor pro. Guys, it seems like, I don't know if YouTube's just messing with me or what, but it's like every video on my suggested list is something along the lines of, is a market crash imminent, right? Like, are we going to see blood and death and fear? And, like fear sells. As we know, a lot of newsletters out there really push fear, and they make a lot of money doing so. And on this show, we try to be objective. We want to look at the realities of what's driving price, which, we have our beliefs about if it's right or wrong, which really doesn't matter. We just try to anticipate what's going to happen in the future. That's what investing is all about, no matter what our beliefs are. What do you guys think? And why don't we just start with the first question from Lete? I'm sorry if I messed that up. Here she asks, will we see a dip in the stock market in October like we had in March? So let me ask you guys, is a stock market crash imminent, or are those fears overblown? Are they justified? What do you guys make of that?
I feel like I get this question every month.
I literally just did an Instagram live. This question was asked multiple times in different forms.
Yep.
Multiple times. So a lot of people are thinking about it.
Rightfully so, right? Because like the market's been on a rip. Nothing makes sense anymore. We're in the middle of a pandemic. Granted, numbers are getting better some places, but a lot of people are confused. Why are markets at all-time highs? And shouldn't we have a crash?
It's interesting. March is still fresh in a lot of people's minds too. Even though the market's rallied a lot, people remember what that correction felt like in March. Mm-hmm. People remember the 20% correction that we had in December 2018. Some people remember the great financial crisis of 08, 09. And then there's probably a few people who remember 2000 to 2002 when the market was down 40% over 3 years. So we tend to overemphasize those moments in our mind, even though if you look at broad market indexes across the world, they're all up a ton from all of those low points. When you look at the actual data, we get a 20% or deeper correction in stock markets about once every 7 years, as judged by the S&P 500 index here in the US anyway. Now, that's not very much, right? But we hear about this every month. Every YouTube video out there where someone's trying to sell gold or sell some newsletter seems like stock market crash imminent, Great Depression incoming. Look at what the Fed is doing. Oh my God.
Yeah.
It's like, calm down, relax. Yeah. Like, you don't have to be on either side. You don't have to be like calling for a crash every week, and you don't have to be like crazy bullish. Like, you can be sensible in the middle, trying to navigate markets, making good long-term financial decisions.
Just understand how the markets work over time. The markets are going to go up, and they're going to go down, and they're going to correct.
But guys, Ray Dalio says that we are at the end of a multi-decade, debt cycle. And I think there's a lot of valid points that he makes, but why could he be right? Why could he be wrong? And what are the real risks in the market right now? Why could we have a crash? If a crash is going to happen, right? Like we like to, as investors, we like to think like chess players, right? We don't try to guess what our opponent's going to do. We look at all the possible outcomes and try to manage risk and position ourselves in a way where we're not going to get crushed no matter what happens.
Yes.
Right. So we've been on the past few episodes, we've been making some jokes about, we're bubblicious, markets are just going crazy right now, which they have been, some of which may be justified, some of which may be overblown. But if the markets are going to crash, why is that going to happen? And what does that look like?
Well, I think that there are, and I see a lot of people talking about this, professionals, in the finance industry, wealth managers, advisors, whatever, they're talking about how it's like throw the finance books out, right? Like the CFA books and like all these books,
we're
kind of in an unprecedented environment where
uncharted territory, right?
Yeah. And we've got, the Fed that's basically backstopping everything. We've got rates that were already low for about a decade or so, right? Before this happened. And now here we are going into another low rate environment. We've got stimulus out the wazoo that's at levels that we've never seen before. Trillions and trillions of dollars. So there's just a lot that we don't really know. Call it an MMT experiment, if you will, that a lot of people are calling it. And so a lot of people are just kind of like, well, there's no way to know for sure if we're going to see inflation, if we're going to, all the things that people have been talking about for a long time now. And if it's all going to go bust.
It bothers me when there are these fake gurus out there who pretend to be able to predict the future with accuracy when they've actually had such a horrible track record in the past.
Like the Harry Dents of the world.
Yeah. And look,
the perma bears.
08-09 financial crisis was really, really tough. I was at the hedge fund at that time. We had our only down year ever in 2008. Now, we bounced back in 2009 with the fund's best year ever, well above our watermark. And it was because we could see that, the world wasn't going to end. And so you are going to get corrections in the market. But I remember after 08 and 09, for like the next probably 5 or 6 years, we had all these guys continue to tell people to take their money out of the market to, buy like bunker stuff and prep for the end of the world. And it was like, no, look, things are going to recover. Things are, generally going to move in a positive direction over time. And I tend to believe that. Now, it doesn't mean we're not going to have corrections. But let's talk about the Fed real quick, because that's a really important point, and it seems to be like one of the big factors driving markets in both directions. So the Fed is absolutely trying to keep rates low for a long time. But the Fed does not control the entire economy. The Fed's not buying stocks. They're not buying businesses. They're not out there putting money in people's pockets. So monetary policy has limits. They've taken rates to zero or near zero, and we've seen that that is effective only to a certain degree in certain areas, like helping businesses refinance, helping consumers refinance at lower rates. On the margins, it helps, but it's not going to save the economy. It's not going to save the markets from a crash per se. What we've also seen, and that's also really important to keep in mind with monetary policy, is what's happening on the fiscal policy side. You mentioned stimulus. We got a massive amount of stimulus to help the world through the pandemic, or at least help the US through the pandemic in the spring timeframe. And now we actually have a little bit of a hole here where there's a lot of people that had that stimulus roll off and it has not been replaced yet. Mm-hmm. So I actually am a little bit cautious about what the impacts of that are going to look like over the next 3 to 4 months.
Yeah. Because the risks are mass evictions, right? That's still a very big risk. I know some places it's completely illegal to evict, but eventually that's going to have to come due. So when that lines up with maybe, a lack of new stimulus, there is the inherent risk, right?
Yeah.
Yeah. The government's going to have to step in and either help the states or figure something out with rent forgiveness for a lot of these people, because they are in the hole and there's no way out for a lot of people right now.
So what does that look like if there are mass evictions in my mind, the risk is it's kind of a cascade, a domino effect of bad shit that just starts happening, and then the markets react to that, right? Yeah. So if that happens, what does that look like, and how can people protect themselves in the worst case scenario, right? If we're looking at the bear case.
Well, it's also important to remember, the stock market is not the economy, because the economy can actually perform relatively weak, and especially in certain areas, and the stock market can still do okay.
Yeah.
Which is the thing that I think is throwing a lot of people off this year and causing a lot of consternation among people that are out of the market or people that are unemployed. So we don't necessarily see the lockstep one-to-one. But look, if you do believe that the lack of stimulus, maybe uncertainty over the elections, maybe other things that are external, like secondary shutdowns or something, could cause the economy and then also the market to decline, you're going to want to have a good plan in place, your emergency funds, your hopefully your investing decisions that you're making are not based on whatever the headlines are, in the Wall Street Journal that week. We talk about the fact that, in investing as a long-term gain, long-term game, not long-term gain. Hopefully it's that too.
Freudian slip. Absolutely.
Yeah. But you don't want to be selling when others are panicking and then buying when we're in a frothy market, right? You kind of want to do the opposite.
Yeah.
So for me, I like to position myself personally with my portfolio where I'm kind of selling into the excess strength. And I tend to really love to buy when that market has that 20 or 30% correction. You don't want to take your stocks out after they've already had the hit. So if we do get a market correction, think about maybe using that to add to some businesses or to some stocks you really like. And maybe right now, in periods right now where we have a little bit of froth in some stocks, maybe you want to take a little profit. I don't know. That's just me. That's how I like to do it.
And even hedge, right? So you've got a pretty significant hedge.
Yeah. And I've been hedged about 50% of my notional portfolio value. I've had hedged since I think late spring, early summer, because I I couldn't quite get my head around the macro environment, but I still wanted to own the businesses in my portfolio. And I just wanted to take a little bit of that directional risk off.
Yeah.
And that's fine. And I'll probably hold that through the election time period and then reevaluate beyond that.
And to your point about like doing the opposite of what's popular or what the herd is doing, that's why you guys went really heavy into some stock plays in March when the markets were panicking.
Yeah.
And I remember I did a survey on Twitter asking people, like, how do you guys see this shaking out? The first option was a depression, full on like, oh, the world is over depression. One of the other options was like a 2008 type recession. The other was a V-bottom recovery, which was the least popular. And I was kind of leaning that way. Like, you know, I could see this market really ripping people's faces off. And you also had that same opinion, Nikki.
No one wanted to listen to me.
No one wanted to listen, right? But you know, and it's not about being right, but it is about like seeing what is popular and what the herd is thinking, and then trying to figure out like how could they be wrong and what would the markets look like if they were wrong.
Yeah. And we've talked a lot about having diversification across asset classes too. Like this is why we talk so much about stocks and crypto.
Yeah.
Because we like to be in multiple asset classes. We talk about metals as well.
Yep.
These are places that may not necessarily be correlated to stocks. Now, in a massive quick downturn, typically all assets tend to be somewhat correlated, but you know, over a longer period of time, your portfolio hopefully has, you know, some diversification outside of one specific asset class.
And I think that people that might be mistaken that we are overly bullish or we're always, you know, saying the market's going to be fine and go up. It's not that. We do see risks. There are tons of risks out there lurking right now between the elections, between what's going on with our economy, etc. But we are pragmatic about how the market has historically worked. And also, sure, like I've said, tons of unknowns. I also have thought a lot about the fact that things are kind of shifting. And when you're in a very low interest rate environment, and Travis, I'd be curious to hear your thoughts about this. The demand for equities, where are you going to get yield, right? When you have nowhere to get risk-free yield. People are going to, and a lot of asset managers are talking about this right now. You kind of have to go heavier into equities to reach those goals, right?
Yeah.
And so does the current environment we're in, is that going to lead us to seeing just demand for equities that, and like you said, the Fed's not buying equities. Everybody, the Fed is not buying equities, right? Yet.
Not yet, anyway.
Not yet, right? You know, is this going to lead to just not seeing those strong, deep corrections that we've seen in the past? Or the corrections are going to be just like we saw in March. They're going to be V bottoms. They're going to be quick. They're going to be, you know, people are going to be buying the effing dip every single time quickly because of just the way our current environment is.
Right.
Is that something that you think could happen? Is the demand for equities are just there just because of where the hell else are you going to get some yield?
I think that's definitely a big part of it. You know,
Well, and I think that, I mean, that's also a case for Bitcoin and gold too, right? Is
Absolutely.
people are looking at the, you know, at the frothiness in the stock market, and they look at Bitcoin as a truly like hard money, right? You can't print more of these. And that's why I'm bullish on it. And that's why I hold a pretty significant percentage of my net worth in it, along with gold. Why don't we take a look at some charts? So just talking about where the markets are, you know, so the NASDAQ and basically all stocks had a pretty deep pullback last week. And then as of today, we're seeing a little bit of a bounce, but from the highs, we were down like 12% off of the highs last week.
I wanted to see more. I was disappointed personally.
Yeah. And I mean, look, I mean, it could still pull back deeper, right?
Yeah.
But you can see the S&P, I mean, we broke out to a new all-time high here on August 24th, had about a week and a half run, and then it snapped back to retest that, and now we're kind of holding up. So yeah, to me, I mean, this is just like a normal pullback in the overall grand scheme of things. Granted, could this be the all-time high in the markets forever? Sure. Probably not, though.
Yeah. And speaking of the data, like I mentioned earlier, once every 7 years or so, we get a 20% or worse correction, but we get about 3 times a year, we get a 5% correction or so in the overall market. So yeah, these are pretty normal. I thought this was pretty healthy. The market had gotten a little bit crazy with how it was pushing up certain stocks, momentum stocks every day. And
yeah,
it's good to see it actually take a little bit of a breather, although this week kind of looks like it's back on momentum stocks rallying again. We've got big M&A deals. The IPO market is super hot. So that looks to me like, you know, the market has quite a bit of support here.
Yeah, even the alts are holding up. You know, Bitcoin is holding up, trying to retest 10K, turn 10K from basically multi-year resistance, right? Like we were, holding below 10K for at least a year, and then back here we had a breakout above 10,500, got up around 12K, and then we pulled back. Now, if we look at the CME futures, we technically have not closed the gap from back in July. So I do think we could get another wave down in Bitcoin, but I don't know. Right here, I'm still holding my long. And we'll see what happens. But even on the metal side, I mean, you can see gold and silver both holding up above support. Got 1900 support on gold, got basically $25 support on silver.
Support all around.
Support for equities, metals, crypto. Like, we're definitely at kind of like one of those pause moments, right? Pause and consolidate.
Because, I mean, maybe when you look at the price action, things are holding up. It doesn't look like we're going to see, a larger sell-off or a larger correction, but you never know. Like, it just takes one thing.
What is it, the saying, there's nothing like price to change sentiment?
Exactly.
There's nothing like a change in price to change sentiment?
That is literally exactly true.
Yeah, man. I mean, even just thinking about, market sentiment in Bitcoin back in mid-March here, like I saw people that I thought were strong hands completely freaking out and capitulating when Bitcoin was at 4K. Mm-hmm. And that's when we knew, okay, now's the time to step in. You wait for those peak moments of, absolute panic or absolute euphoria, and you never want to be on the same side as that.
See, we're not permabulls. We love corrections. We love blood.
Yeah, give me blood, man. Those are buying opportunities. Hell yeah.
Absolutely.
Well, so Trav, to your point about M&A and IPOs and all that stuff coming down, I've got a bunch of notes here. You guys have had a ton of activity over the past couple of weeks. You guys want to talk about like Nvidia and Gilead and all the stuff that's been shuffling?
Yeah, quite a few big deals that were announced right before the week started. Obviously, Nvidia buying ARM, the semiconductor company, for $40 billion was one of the biggest, and that is just a really landmark deal for Nvidia and for the sector as a whole. Nvidia, obviously the leader in GPUs worldwide. Them and AMD basically have the oligopoly. They now are moving into a separate area of computing for them. And ARM provides a lot of the smaller, more power-efficient chips for mobile phones and IoT and areas like that. So pretty interesting that NVIDIA now is becoming a much broader semiconductor company. And the market seemed to like it. NVIDIA stock was up. So that was interesting to see. Pretty big price tag there, but...
Yeah, Nvidia's been on a rip, man. Just 5 years ago, they were down in the $20 range. Now it's over 500. Is this unsustainable? How's the valuation on Nvidia right now?
Yeah, I mean, it looks pretty rich, obviously. So, I'm going to pop open Koyfin and look at some of the estimates going out. But, those estimates will have to change too to incorporate the ARM acquisition. But, overall, you're looking at a $320 billion market cap or enterprise value today. You've got, when you look at something like an earnings multiple, it's trading at 50 times next year's earnings. So that is a very, very high multiple typically, especially for a large company. But the growth rates on NVIDIA, they were growing revenue 30-40% year over year recently. So that you could argue may be justified. Now, this can't continue forever. If this stock goes up another 2 or 3x, I think that a lot of the future price appreciation potential is probably baked in at that point.
Yeah.
It just becomes almost too large, and the expectations get built in that any good results will have already been baked into the price of the stocks.
Right. Yeah.
We're getting closer to that level. I don't know if we're quite there yet with NVIDIA, but not one that I own specifically right now, unfortunately. But I do own some semi exposure elsewhere. But
so interesting story, interesting developments, but just too expensive at this point, right?
Mm-hmm. Yeah. EPS right now, expected to earn about $12 a year or two from now. So again, pretty hefty multiple in the 40 plus range.
Yeah.
But this is 2020. Valuations don't matter.
That's right. Yeah. Yeah. Valuations.
Apparently not.
That's part of all this.
Yeah. Gilead buys IMMU. What do you guys make of this one? This is pretty
big biotech deal. So Immunomedics working on a number of cancer treatment drugs, and Gilead is a very diversified pharma company, and they It was pretty wild, actually, because they bid a 108% premium above Immunomedics' prior stock price. So it's a very, very rich premium to the prior stock price that Immunomedics was trading at for them to actually acquire them. So Gilead paying $21 billion overall, but that 100% plus premium to the previous stock price was pretty eye-popping, and it sent the whole biotech index up about 4% on Monday when it was announced. So a lot of biotechs getting some love now, it seems. And I don't have any real insights into this specific deal, just noted that it was a big one, and I think we'll continue to see a lot of M&A in the pharma space over the next few years. There's just a lot going on in R&D, and a lot of like small biotechs have come public over the last few years. So there's just a lot of smaller targets, and then there's all these larger pharmas that need to keep refreshing their drug portfolios every so often.
Isn't this one of the signs of coming out of a recession and going into a new cycle? A lot of acquisitions, mergers and acquisitions.
Mm-hmm. Yeah.
Isn't that one of the main signs?
Yeah. Absolutely. Yeah, no, I think, M&A and IPOs tend to correlate with pretty bullish market cycles. And we have both of those right now. Now that can change on a dime though, too, because we did see, for instance, in March and April, M&A just kind of disappeared for a month or two.
Yeah. Everything came to a screeching halt.
Yeah.
But it seems like things are picking back up. People are trying to get back to normal. Companies are shaking and moving, and there's a lot of money out there right now, right?
Yep.
And that's the thing. When you have a lot of free cash flow chasing assets, that's when things get really ridiculous.
Yeah.
So interesting. So next up, let's talk about TikTok, which, by the way, hopefully you guys don't have on your phones at this point in time. But what do you guys make? So Oracle, it's not a buyout. What
like
is
a
this?
Partnership.
Yeah, it's like we're gonna trust Oracle with the data now more than the Chinese Communist Party. Like, how does this work?
Yeah, I haven't seen actually all the details released on the partnership deal, but it sounded to me from the reports that came out that it was going to be, the reason Oracle's involved in this is because they want to build up their cloud business. So they want TikTok as a marquee customer that will help drive utilization of their cloud services. They get to say, hey, US government, we're not going to be shipping everyone's mobile phone data out to China, to TikTok's parent company, ByteDance. We're going to keep it on US servers in Oracle data centers. We'll make sure it's secure and safe and nothing bad is being done with it.
Yeah.
We'll see. There's also, some private equity and venture capital firms that will remain shareholders of TikTok and keep their equity stakes. So yeah, like I said, I don't know actually how much of the actual company Oracle is getting and what that means, but we'll have to see if the deal is approved by the administration, and then hopefully we'll get some more details.
Yeah. Any thoughts on that, Nick?
No, you pretty much covered it.
Yeah.
It's really weird, right?
It's really, yeah.
Oracle, like an enterprise software company that's kind of a dinosaur acquiring TikTok.
I think there might be
some
relations in the White House that got them in on the deal.
Trump would never do that.
I don't know.
Power.
I don't know what that was all about, but
yeah.
Okay.
It's not even an acquisition. It's just a partnership.
Yeah.
So, until
we're
we know
just trying
more,
not to get kicked out of the U.S.
That's right. It enables TikTok to continue to operate. But meanwhile, Instagram and Snapchat, and I saw somebody else announce recently that they had a Reels-like. Oh, YouTube announced they had a Reels-like product. They're all trying to take that business away.
And honestly, I've been noticing a lot of people that were using Instagram and pulling in their TikTok videos and posting it on their Instagram. They've gotten rid of their TikTok and they've just been posting Insta Reels.
Interesting.
Which is exactly what Facebook wanted.
So anybody that's watching this on YouTube that is, let's say, under 25, if you guys have insight as to what are the cool kids doing right now? Because I don't know, I'm old now.
Gen Z.
Yeah. What are you guys doing? Are you using TikTok? Are you using Instagram Reels? What are you doing?
Well, I know Gen Z is super stoked about the Oracle deal because all those funny videos went out. By the way, if you don't follow, what is that account on Twitter? It's like TikTok.
Is it like FinTalks or something?
TikTok investments on Twitter. It's the
TikTok
best.
traders.
I'm gonna look it up.
It's the best because he or she, whoever runs it, pulls all the best investing and trading Gen Z gurus from
oh my God.
TikTok and posts it. Hilarious. Anywho, Gen Z is stoked because they thought that they were going to get their TikTok taken away.
Oh, no, don't take away the TikTok. Well, I guess we'll see. Okay, so moving on. Opendoor, Chamath has taken it public through another SPAC. So this is the year of SPACs, which we talked about at length last week.
That's right. Yeah. So we talked about the hot IPO market. It's also a hot SPAC market, which is, kind of an alternative way for private companies to end up going public through these blank check companies that we've talked about called SPACs. And Chamath, famously, his first SPAC took Virgin Galactic public. Now that ticker is SPCE.
Yep.
And his second SPAC, IPOB, has now acquired or is in an agreement to acquire Opendoor, which was the very first company in the iBuying space, which is essentially a industry that's developing, and Zillow and Redfin are now involved as well, but they are trying to disrupt the real estate transaction market. They want to be able to buy and sell homes from people kind of on a whim without going through traditional brokers. And
so does Opendoor actually purchase the homes? Yep. So they're kind of like a guaranteed, I remember this from like the early 2000s. You had companies that stepped in, and like if you were building a home, but it was contingent upon selling your old home, like they would guarantee a purchase price. And obviously when the market collapsed, all those companies went bankrupt. Mm-hmm. What would happen to this if the markets took a dump?
That's a good question. They do take some risk there on the balance sheet when they're buying homes, and they have obviously lots of models and algorithms to try to make sure that they get a positive margin when they buy it from you at what they consider a little bit of a discount, and then hopefully they think they can sell it in the next 2 or 3 months at a slight premium. But if the real estate markets were to take a massive tumble the way they did in 2008, they could be sitting on a bunch of homes, at least for a while, that they might not be able to sell at the prices they bought them at. So there's some risk there.
Yeah.
But it's a massive market, obviously. Real estate, multi-trillion-dollar market. The transaction sizes are large. So if they can get a big enough market share, even if a small margin on each home across many, many homes, that's pretty big numbers. So that's why people get excited about iBuying. Zillow stock has been on a monster run this year because of the same trend.
They're just ticker Z, right?
Yeah.
Yeah, I feel like the real estate space is just so ripe for disruption, and it's so inefficient. Everything from, paying 6% to realtors, which no offense to realtors, but my God, man, that is such a massive margin that just gets sucked out of every deal, to, title searches here in the US. Like it's still so inefficient. Like 5 years ago, I would have thought by now in 2020, it'd be on the blockchain and like we would be way more efficient and it'd be quicker and cheaper, but I don't know. It just seems to be moving at a snail's pace because there's a lot of incumbents that really don't want to be disrupted. But, hopefully Opendoor or whoever's trying to innovate in this space will bring real estate into this century.
Yeah.
So they're doing like trade in your house, just like you'd go to a car dealership and trade in your car, like essentially? Is that
more or less? Yeah. They basically will present you with an offer within, I believe, a few hours to buy your home. Now, it doesn't work for every home. I think they have like a cap on the value. I don't know if they do jumbos yet. I don't think they buy homes over $1 million yet and things like that. It has to meet their certain criteria.
Yeah.
But they have a model that tries to value every piece of residential real estate in all their markets.
Interesting. Is it listed yet? Is the SPAC listed?
Well, the SPAC is, IPOB, because it was just a blank company. We didn't know what they were going to acquire.
Yeah.
And it had a nice little pop. It's up about 40-50% from the original IPO price.
Yeah.
The blank check company IPO is at a price around low $10 per share. Today, clearly trading at about $15-16 per share. So the market seems to like the deal.
So explain this to me. So with a SPAC, so we talked about this a lot over the past few episodes. So anybody watching this, if you don't know the basics, watch that. But basically what happens is it lists and there's no deal announced, right? It's just a public listing and you're basically like invested in a venture fund, right? Is that kind of the thought process behind it?
A venture fund that's only going to invest in one company though.
Right.
And it won't be like an early stage company. It'll be a late stage company that they immediately take public through the SPAC.
Right. So the risk is lower than say a tech startup scene, right? Like in the angel investing space, we got to cut, 50 checks to hopefully get a 100 bagger, right? With this one, it's like, okay, you have a publicly listed ticker. It starts trading, super low volume, really nothing going on. And then when there's an announcement, that's when it starts trading and going in play. So, is this something that you guys would be interested in either trading or investing in, or like, what would you look for to start participating?
Definitely trading. I mean, the SPAC trading, they're great trading vehicles once they get some price action going.
Once you have some momentum.
Yeah, once you get that momentum, like Virgin Galactic was a great trader. What was the other one?
DraftKings
was a
Nikola.
great trader.
Yeah.
Nikola was a great trader. Keyword trader, right?
Yeah.
In terms of understanding you have to look into the fundamentals of the company. A lot of these are early stage,
Super early, yeah.
You know, so you don't have much to go on, and you kind of have to just dig in and get whatever data you can find on the company. And if you see the vision.
Yeah. You know, it's funny. There's a lot of similarities to how I look at this and an altcoin, right? Because like with an altcoin, sometimes you'll have a listing, it'll be trading on an exchange, but they haven't launched anything yet. So you're still basically trading or investing on a white paper sometimes, right? And most of those lose. And the ones that are still trading, a lot of them are like basically just zombies.
Yeah.
Like they should be dead, but people are still trading the tickers.
Yeah, and some of the companies that these guys are investing in, like if you look at Virgin Galactic, their literal earnings report was like 0 revenue for the quarter, like 0.
Yeah.
I mean, you have to just understand what it is that you are actually buying.
Right.
And when you're investing in a SPAC, before it announces a deal, one of the interesting things about SPACs is that you could actually, if they never do a deal or the deal gets voted down by shareholders, you could actually get most or all your money back if you invested at like the $10 IPO price, because they hold all this cash in a trust where they earn a little bit of interest just to pay the expenses. But if the deal is not done in the right time frame, that money gets sent back to the shareholders. And so in some ways, it's kind of like a lower risk, potentially high reward if a deal is done and it's a good deal. Now, the risk obviously is that they do a deal, so you don't get your money back, but the deal is actually a bad deal or it's done at some high, crazy valuation. And then subsequently, the stock goes down below $10 a share because now you own a company that no one wants to own.
Right.
So that does happen occasionally to SPACs. But it's interesting. You can see like IPOC is Chamath's third SPAC, and it has not announced a deal yet. And it has been moving up in price in anticipation now that, well, this thing's going to acquire something cool and it's going to be a $15 or $20 stock once they do that. So people have already started bidding up SPACs now above their liquidation value, which I think is, maybe in some sense not irrational, because clearly with these hot IPO vehicles, IPOB, IPOC, they tend to do some pretty sexy acquisitions. So maybe you could front run it.
And if you're betting on the horse, right? You're betting on Chamath, you're betting on the management team. Like if you're like, man, these guys have a history of delivering, treat it like venture capital. Basically, it's like, if you've wanted to be an angel investor, but you're not accredited, here's maybe a way that you can do something kind of similar.
Yeah, for sure. And there's a lot of SPACs out there now. There's all these different ones. There's a couple of like fintech SPACs. There's like a bunch of private equity firms have started SPACs. Bill Ackman has like a multi-billion-dollar SPAC, and who knows what he'll end up acquiring. But these vehicles, a lot of them have started trading up above their liquidation values. So interesting to watch that.
There's totally not a bubble, bro. Totally not a bubble. This is signs of the end.
Yeah.
Oh man. Let's talk IPOs real quick. Snowflake. What is Snowflake other than a millennial and Gen Z insult?
Oh my gosh, I was diving into that today. Honestly, that whole world just confuses me. All the cloud stuff and all the server stuff and all. I need to. Basically, it's a data
warehouse company. I actually know this one well, and sort of by chance, because I've worked with a bunch of big data databases for a couple of different projects. Like when I was working at a startup, ingesting all our data from our customer applications and from our website and stuff like that, we wanted to be able to analyze it and figure out what we needed to optimize. And we, essentially dumped all our data into a big data warehouse, and we were using Redshift. I have a database where I ingest a bunch of daily stock price data, and I manage that on my own. So I've used Google Cloud for that, or BigQuery is their specific data warehouse. It's quite good. So is Redshift. But Snowflake came along as kind of a newer player that's not part of the big cloud. They're not part of AWS. They're not part of Google. They're not part of
They work
Azure.
with them.
They do in some cases. Yeah, you can actually get Snowflake instances through some of the cloud players, but they essentially are an independent data warehouse company, and they've done some really innovative stuff. So you could think about like data warehouse is essentially just an optimized database. It's optimized for high volumes of data and ingesting high volumes of data and doing lots of different like queries on that data in an efficient way. And what's cool about Snowflake is they've pioneered a model where you can actually share data sets and be able to query them from your browser and do lots of interesting things. They optimize it to be super fast and super efficient. You don't have to like have multiple teams waiting on each other's queries to be able to query it. So they do a lot of like really interesting optimizations behind the scenes. And people are really excited about this because the company has been growing super, super fast. It's been rumored to be one of the hotter companies to go public. And then on top of that, you had Berkshire say that they were going to invest pre-IPO, which Berkshire Hathaway is like a value investing shop.
Yeah.
Everyone was
And
like,
then they're
what?
investing at a company at like 30 times revenues. It's something they've never done before.
Do you think this is Buffett or is this his predecessors that are pushing the...
Yeah, no, it's the guys, Todd and Ted, who are the guys that are going to manage Berkshire after Warren and Charlie pass on.
Yeah.
So I believe it's their call here. And honestly, kind of smart because if you can get pre-IPO shares, I think this thing is going to trade up quite a bit. They've already announced that they're raising the pricing range for the IPO when it's going to come public. So it's going to come public at a crazy valuation.
Are you buying the IPO is the question.
I wanted to. I wanted to own part of this company.
I thought you were. That's why, because you said this was the one that you would maybe consider.
Yeah.
To actually buy like on IPO day.
Yeah.
But now I think it just keeps getting bid up. Right?
Yeah, I think the article I just had up was saying they raised it over $100 a share, which was like 30% higher than they were originally anticipating.
Yep.
And revenue is growing, what, over 130% or something crazy like that.
Yeah, and super high retention and just
Who's their customer? Is it consumer? Is it enterprise level?
Enterprise, I
It's
think.
businesses. Yeah, I mean it's everyone from SMBs all the way up to large enterprises.
Okay.
And typically medium to larger businesses will definitely use something like this more, but
Which, by the way, I gotta hand it to TechCrunch for including the awesome picture of the trader looking into the sky, thinking deeply of, oh man, what's the stock gonna do?
so funny.
Oh man! All right, cool. So a lot of M&A happening, a lot of IPOs coming down the pipeline. There's absolutely risk in the markets. We are not perma bulls or perma bears. Damn it.
We love blood.
Yeah, we love blood. Looking for buying opportunities. I haven't really had any trades in crypto over the past couple of weeks. We've seen a lot of deflation and some stuff that got really overheated. Link got really overheated and has been pulling back. I'm still holding a little runner on this one. Let me see if I can find there's my notes. So bought at 5, scaled out all the way as high as like 18. And you can see, this is just what happens with altcoins. They get overheated, everybody piles in, and then they slap everybody in the face. And
Pullbacks happen.
Wait, what? You mean stonks don't just go up forever?
Stonks don't just go up, I promise.
Now what about Tesla?
Yeah.
Oh god.
Oh man, what's Tesla
Tesla is
doing
actually bouncing
Feels
with
like
a
that
vengeance.
stock goes up almost every day.
It's the honey badger. It just won't.
Which, by the
Give
way,
up.
I'm getting a Cybertruck.
Oh, that's right. Well,
I think
if they ever
deliver,
actually make it.
Yeah.
So
Good luck.
I've been in the market for a new truck because I need bigger towing capacity. My Denali now tows 10,000 pounds.
Oh, okay. That's
I don't know what it is.
That
It's
seems
not
high.
enough though. It's not enough because I learned more about like axle, like max load on each axle and then payload. And I'm like, when we're towing our boat that weighs like 8,000 pounds plus stuff, I'm like, yeah, it's kind of sketchy because our boat like dwarfs the Denali. So I was like, I was in the market looking at like F-250s and stuff to tow more. And we were thinking about getting an RV. And then I watched the Tesla, the Cybertruck announcement again, just for fun. And then I saw a guy who, what's his name? Sandy something.
Oh, Sandy Monroe, the guy who does the teardowns. Yeah.
Yeah, he's like, I guess, a legend in the engineering space. He did some videos talking about the Cybertruck, and he was impressed with it. And I'm like, damn, 14,000 pound towing capacity, 0 to 60 in 2.9 seconds, 500 theoretical mile range. I don't know what that is if you're towing some heavy ass load.
Looks like an alien truck.
Looks like an alien truck.
Cyberpunk.
Bulletproof, like pretty cool. And it's really high off the ground. So you have a ground clearance for some like off-roading, which I've never done, but that sounds cool. So yeah, guys,
I
getting
hope
a
they
Cybertruck.
improve the windows a little bit, like that demonstration didn't go so well.
I wouldn't be surprised if they did that on purpose.
Yeah.
Any news is good, or any publicity is good publicity.
Fair point.
But I heard, what was it, that they were testing that in the before the event, and then I guess it just weakened I don't know.
Yeah. It's funny because a lot of these things are obviously prototypes. We won't know exactly all of the true specs until these things are in mass production.
Yeah.
But if they can deliver on what they say they can, it does sound pretty damn impressive.
Yeah. It'll be fun. I don't know. I know you're highly critical, so I'm like, yeah, dude, of course I'm getting a Tesla. I'm going to rub it in Travis's face.
No, it's funny. I think I actually rode in one the other night. Oddly, an Uber I believe was a Model 3. And, I can see why everyone loves them. The cars themselves, I think, are a pretty impressive product. But, I've always been concerned about more the service organization within Tesla and some of the places they cut corners.
Yeah.
There was that article out the other day, the Model Y, which I think they rushed into production a little too soon. There were some pieces in the engine that literally had some wooden pieces duct taped to them, and a bunch of
what the hell?
Model Y owners, it was posted in the Tesla forum, and a bunch of the Model Y owners checked their engine. They're like, oh yeah, I've got that too. And it looked like literally something from Home Depot that was taped to a part in the engine.
Wow.
And no wonder now Tesla's saying they're going to redesign the Model Y. So I think there's some things they still need to work out there.
Yeah.
Yeah, that does scare me. And you wanted me to trust that driving. You wanted me to get one of those Teslas for the driving because you think I'm a bad driver, and you were like, autopilot is the way
It's
for
the future,
you,
man.
and I'm
Yeah.
like, I don't trust their autopilot. Are you kidding me? Like,
I don't want to be beta tested.
I don't want to beta test that. I'd rather know.
I'll
that
be the
I'm in
crash test
control.
dummy. We'll see how it goes. No, I even opted for the 8K. What do you call it? The future autonomous
Future
stuff.
autopilot.
I'm on Team Elon. Okay, I'm betting that Elon
that's
is going to
fine.
deliver. He's going to give us level 5 or whatever, and I'm going to be able to just go to
Look.
sleep and drive from New York to LA.
It's working. Look at the stock.
Yeah,
People love some Elon.
The believers
and some Tesla.
are there. That's for sure. It's funny too because, Nikola has been in the news this week with its whole.
Oh yeah, how did we
report.
not mention this? What do you make of this? So, what was it? A short seller came out and called it a fraud.
Hindenburg Research, which has a decent track record of exposing some true frauds out there, they put a really long report out on Nikola and basically said they had done a bunch of work, and you can read through it. It's pretty long. I think it's something like 15 or 20,000 word report. And they call out just a lot of misstatements from the chairman, Trevor Milton, who was famous for being on Twitter and talking about Nikola all the time. And he obviously has been instrumental in bringing this business public, but there's still a lot to be done here. The business has only really produced some initial prototypes. They've made a lot of big claims about what they're going to do. They announced recently this big partnership with GM where they're actually going to use a bunch of GM's battery technology and vehicle technology. And so everyone's like, well, wait, I thought you were supposed to have all this innovative EV tech, right? And so there's all these claims too about the hydrogen product that they're going to be putting out as well, the hydrogen fueled trucks. And so basically the short report raised a bunch of questions, not only about some of the claims, but also some of the demonstrations they've done where they said that the truck was able to drive itself. And actually it turns out they towed it up to a hill and rolled it down the hill.
Oh, damn.
And then, just a bunch of weird stuff too. Like Trevor hired his brother who didn't seem to be too qualified. They hired them as like the head of like hydrogen infrastructure. So there was just some questionable things raised by the short report. Now I will say a lot of that was backward looking, 3-4 years ago, of course they were probably making a lot of statements about things that maybe they didn't have yet, right? Like these big claims about things, fake it till you make it strategy. But they have kind of made it. They made it public. They got a bunch of capital. They got partnerships with GM and CNH and Nell out of Norway, I think. So, there's, I think, bull and bear arguments on both sides here. The thing that was embarrassing for Nikola was that Trevor said he was going to do a point-by-point rebuttal of the short report, and that he spent 14 hours on Friday doing it. And then the company came out and said Friday with their press release that actually we're just going to sue the shorts. We're not going to rebut this report. It's bullshit, but we're going to involve the SEC and we're going to have lawyers and we're going to sue them. And everybody's like, really, man? You couldn't just like refute the report? And then they did come out Monday and actually have a little bit more of a detailed rebuttal. But there's still just a lot of questions here about like what was fake, what was real, is the GM partnership still going to be there? It looks like it probably will, but it's going to be a volatile stock for a while.
When you see this kind of action where, short sellers come out and then CEOs or companies are having to defend themselves, how many times out of all of those times does it become a fraud or a failure?
It's a really interesting pattern to note that typically when you see the executives go after the short sellers and just talk, call them names and talk about bringing in the SEC or bringing in lawyers to sue them, I would say probably out of my anecdotal evidence by the hedge fund, probably 8 out of 10 of those ended up being actual frauds.
Yeah.
Because if you're a real business and you've got real momentum behind you and the shorts are just posting BS, you can actually refute it with facts. And you can
prove
just,
them wrong.
You just go operate your business
Exactly.
like Elon has done, you know? And
yeah, and I asked that because from the technical side, I've seen this movie play out 1,000 times. And it gives me some vibes of like, you know, MGT with McAfee.
Yeah.
You know, when all of that went down and like they're defending the stock price and they're saying, yeah, if you join us on, you know, it's going to be a volatile ride in the stock, but you'll be rewarded, you know.
Yeah.
Stuff like that. It's just sketchy to me. And it does bring some concern.
Yeah. Well, in the stock, I mean, it has not been performing nearly as well as Tesla. So obviously people are looking at this and really looking at the risk for what it is.
And at some point it's like put up or shut up, like just operate the business, focus on the business. It's probably time to focus on actually creating products and don't worry so much about the day-to-day stock movement and don't worry about short sellers because the business will take care of itself and the stock will take care of itself. The actual, one of the best rebuttals I've ever seen of short sellers was Reed Hastings back in like, I think 2007 or 2008. Whitney Tilson, a short seller, came out with a long report why he thought the business model of Netflix was structurally bad and wouldn't work over time. And Reed put out a letter publicly and said, you should cover your short, but here's why. And bam, 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 this is what we plan to do. This is our vision. You know, this is why we think this business is going to work. And that business, I think you can find that letter still online. I think it's on like businessinsider.com. Just Google like Reed Hastings short letter or something. And he did what they said they were going to do. And over time, Netflix became a monster winner stock.
Yeah. And
the short reports don't matter.
Yeah. I think that's a great place to kind of wrap it up. We can get into some Q&A.
Yeah.
Did we answer Leite's question? Will we see a dip in the stock market in October or not? What are you guys saying?
Possibly, but I personally don't know if it'll be as deep of a correction. Mm-hmm. I think that there could be a lot of buyers coming in to buy dips.
Yeah. My guess, and again, this is just a guess, based on the technical analysis alone, we are in a bull market until we're not.
Yeah.
Meaning, as long as we're making higher highs and higher lows here, I've found historically it just makes sense to stick with that until there's a shift in market structure. Which right now, I mean, there is nothing bearish about the TA to me right now.
No.
Like, it's just, you know, again, like Trav said, you know, that can change. That sentiment can change in one day. But as of right now, I mean, the price action is bullish.
Yeah, and most of the signs that we talked about today, like the IPO market, the M&A market, seems to suggest, some support there. And I would love to see some fiscal stimulus come through. I don't know if that's going to happen, but that would also provide for support.
Yeah.
I will say the options markets are pricing in a little bit higher volatility. I think we're calling that like the election cycle volatility into October and November. So things could get pretty choppy, I think. For me, doesn't really matter. I'm hoping to make money no matter what. I've got some hedges on, but I've also got some positions I think are super undervalued. So
yeah. So I think the answer is we welcome a pullback. We welcome a crash. If everybody wants to freak out and cause a big washout for some buying opportunities, great. If not,
yeah.
I think it'd be healthy to see a nice correction.
And anyone who tells you that they have foresight into exactly what's going to happen,
they're
BS.
full of it.
Yeah.
Yeah.
Yep.
No one knows.
All right. Gary asks, I've had an account with Coinbase and Coinbase Pro for a while, but I'm not too happy with them. I'm in the US, and my question is, what other exchanges do you recommend? Gary and anybody else that's curious about the best US exchanges, I will link up a document where I've listed out the top like half a dozen US exchanges and then all of the tickers that are tradable on those exchanges. There seems to be, and we've talked about this over the past couple of months, a big kind of bifurcation between US tradable cryptos and like Asian listings, right? Like a lot of companies that don't list in the US, I like to ask, well, why don't you list in the US? I've noticed more scams internationally. I've noticed more tickers that just don't really catch a trend in price because their capital kind of gets sucked up really quickly. So I am a fan of projects that actually trade on US exchanges. I just like exchange diversification, meaning I like to see a project that trades on Kraken, Coinbase, Binance, all of the top ones. And if there's a crypto that only trades on like one exchange, I just tend to avoid it because the trends just really aren't sustainable.
Would you say generally, though, as far as exchanges go, you want to stick to the top few that are well-funded, transparent to some extent that are, basically the top 3 or 4.
Absolutely. Yeah. I mean, I have accounts with all the top ones. I avoid obviously anybody that's been proven to do wash trading or, there's a lot of bullshit that comes out of like South Korea and, obviously China. You got to stay away from those exchanges. It makes me think about like 10 to 15 years ago in the Forex market, when you had this big Forex boom and you had all of these really small, shitty brokers that would just trade against their customers. I see a lot of the same behavior, even if it's not exactly the same. I see a lot of that same crap happening in crypto that I did, in the old Forex days. It's a lot of get rich quick. It's a lot of like false promises, people chasing, I want to turn my $250 into $1 million overnight. Right. And those people always lose. Like some of them get lucky and, it's kind of like the Wall Street bets where they make a lot of money quickly, but then they lose it all and then some, right? So that's why we try to teach like actual like good trading behavior. Start with the mental side, develop a strategy, stick to high probability stuff, manage your risk, right? All the things that nobody really wants to do. That's what actually makes money.
So not 50 times leverage?
At least 50 times leverage.
Speaking of, I have a class to teach for our community. So
on that note,
I have to go.
All right. Thanks for being here with us, guys. Hope you enjoyed the episode. And we'll see you guys next week.